Welcome back, subscribers. This is Johnny Crypto, and this is how to make money in a downward trending market. As I talked about in this video right here about what to do, how to spot when the market is reversing in a downward trend. All right, and now that we think the consensus of the market is fairly negative at the moment and is only going to get worse throughout 2019, probably the first quarter or so, this is where smart money starts making money by shorting stocks. And I'll show you how to short real big mainstream stocks using a simple mobile app called Robinhood. And I know I have a bunch of option tutorials on my channel that you guys can go check out, but let's just say we think Facebook is going to go down in the near future. All right, now that we have our stock and our direction, well, now we just need to purchase the option. So I'm going to go down to trade options. This guy is, I don't like using this because you can never tell how many open interest or how many people are willing to purchase the options when you go, oh, I think it's going down, and you can't really tell very well. So my next step is to pick a date. I'm going to say January 11th, 2019, just so I have some time for the market to fluctuate in my favor. From there, I have to pick a price. And I like to pick sometimes a little bit at the money and out of the money options just because they tend to be a little bit cheaper. So what I mean by that is we have the price currently is $141.95. And I'm in the put section. That's important. Put is meaning I'm shorting it. I'm thinking it's going to go down. That's the direction. The downward trend is negative. We're losing money. I hope it goes down. So I want to make sure I'm on put and buy. And what I mean by at the money is these guys, this 141 and 142. And then what I mean by in the money is anything that's above 142 is in the money, meaning that Facebook is already below 143 or 144 or 145 because it's at 141 right now. So no matter what, I'm in the money. My option is making money as long as it keeps going down. And then out of the money is these guys, the 140, 139, 138. And I'm talking really fast, but do you know why they're called out of the money? Well, if you said, Johnny, because it's not at that price yet, well, then you're absolutely correct. All right, and you can tell they're cheaper because of that. You know, you aren't going to make money until it gets down to that 136 if you decided to choose this one. All right, but me, I'm thinking Facebook is just going to go down a little bit, and I hope it goes down to zero. I mean, I would make 100% on my profit, but that would be ideal. But just for the sake of educational purposes, let's say it goes down to 140, or that's what I'm betting on. So it's $4.45, which is actually $445. And what's interesting is you see, hey, what's this break-even price? Why is that $135.55 when you're saying I'm going to make money if it goes below 140? Well, that's because I paid $4.45 for this option. And so here, look at this. So if I go 140 minus what I paid for it, so the strike minus what I paid for it gives me my break even, 135.55. Look at that. So if it gets down to there, I'm exactly at zero. I've made $445 on the option, and it's continuing, hopefully, ideally going down. All right, so my next step is to actually click on the actual option. And then I'm going to go up here to the statistics, and I want to see that there's ideally 1,000 of open interest and volume, ideally 100. All right. And because of that, I'm going to go a little bit further out. I'm changing my expiration date till January 18th. All right. And I'm going to go back with that relatively right around at the money, potentially out of the money. But I'm clicking on that guy again, going to statistics, and if you'll notice, my open interest 34K, volume 2K. Why is that so important? Well, it's liquidity. So if I need to sell this, I can easily sell it. Saying, hey, Facebook started going up. I wanted to get out of my position. I could easily do that. Or it goes in my direction and I want to be able to sell it to gain profits. Well, that's very, very important. And as the closer I get to that actual price, well, my delta is going to go up, meaning dollar for dollar, I'm going to make money. So right now my delta is at 0.41, meaning if Facebook was to go down $1, I'd make $41 on that. Because keep in mind, one contract is 100 shares of Facebook. All right. So I'm controlling $14,000 worth of Facebook. So if it goes down $1, I'll make, 41. So it's nifty. And for me to make $14,000, well, Facebook would have to go to zero. All right. But anyway, that's not what this tutorial is essentially about. This is just trying to help you short the market. And that's exactly what we're doing. So we're going to go back. I'm going to contracts. I'm only going to pay for one right now. And it's going to show me my limit price, what it's willing to put in there, as high as 510 or as low 495. You can try this because of the liquidity needs. I bet I'm going to be able to get filled right there at the bottom at $495, which helps out me. It makes my break even a little bit higher. So I don't have to worry about that. So then I'm just going to go review, swipe up, order received, and I'm all set to go. Now I just got to wait for Facebook to go down. Anyway, guys, that's my quick tutorial on how to short options. If you like this video, please check out my channel. I've got a bunch other. I'm going to make some more on strangles and iron condors in the actual Robinhood system because they updated that. So I'm going to make a video on that as well. But thank you guys. I couldn't do it without you. I really appreciate the support. And until next time, this is Johnny signing off.